There is a specific kind of session every trader recognizes, the session that needs to work, the session where things outside the screen depend on what happens inside it. And the market did what it always does in those sessions. It took the money, not because it knew, but as if it did. And this is not a coincidence. It never was. And that session will come again, you know it will, if you don't understand how to break this cycle. Lucas had been trading for 2 years, and the last 18 months had been the best period of his trading life. These were not dramatic results. Quite the opposite. Quiet ones. The kind that grow slowly, and you only notice when you look back rather than forward. He had found his system. He had built his rules. Through a painful cycle of repetition, he had developed the ability to wait in front of a moving market for the conditions his strategy required before acting. That ability had cost him more than money. It had cost the part of him that craved action before conditions were ripe. He had spent months killing that part. He thought he had succeeded. He had not yet learned that it had only gone quiet. It had not left. And in that silence, something was waiting. For exactly the right moment. The bad month arrived quietly and without announcing itself. It always does. This cycle begins with a cluster of losses early in the month that stay within normal parameters but feel anything but normal, followed by 2 weeks of choppy conditions where his setups appeared and immediately stopped working, where the market moved in the direction he had identified but not from the entry he had planned, where everything he touched went sideways instead of forward. By the end of the month, he was down more than he had been in any single month since he started trading seriously. Not catastrophic, recoverable. But the number on the screen was not what worried him. What worried him was the other number. The number that was not on the trading screen at all. And that number was about to change everything. That number was $800. Lucas's rent, due in 11 days. He had $400 in the account. The math was simple, and the math was wrong, and he knew the math was wrong, and he did the math anyway. $400, 11 days. If he could get to $1,200, he could pay rent and pull the remaining $400 back out and start the next month at 0 instead of negative. There was a number, a timeline, and a logic to it that felt entirely reasonable in the moment he constructed it. Lucas made the plan. And the next morning, he opened the platform. He opened the platform the next morning with $400 and a number in his head. That was not 400. It was 1,200. And the distance between those two numbers was not just a trading target. It was a pressure gradient that would affect every single decision he made from the start of the session to the end. Lucas did not know this. He thought he was trading his system. He thought he was looking for his setups. He was not. He was looking for $1,200. When he looked at the terminal, when he looked at the charts, the only thing he saw was that. How do I reach 1,200 as quickly as possible? That was the only question and motivation in his head. But Lucas kept assuming in his mind that he would trade his system rationally. Yet $1,200 does not appear on a chart. It cannot be identified with an entry criterion or a stop placement or a risk-to-reward ratio. It comes from a need, and the market does not care about your needs. It does not care about your urgency. And so your needs and urgency will not produce setups, but Lucas will still find a way to find them, because he had already decided he had no other choice. Despite never once having managed need-driven trading correctly, Lucas sat down at the screen to force this profit. After all, he thought, anything can happen. He seemed capable of it from his own perspective. He had made this kind of profit in such short periods before. But there was one thing that was different, and that one thing was enough to change everything. The first trade came 20 minutes into the session. The setup had genuinely presented itself. Lucas was not imagining it. But the confirmations were weak, and under normal circumstances, this was not a trade Lucas would take. Lucas thought. He hesitated. But then he saw something, and his mind went to a past example. He had encountered a setup like this before, and despite weak confirmations, despite momentum not being there, he had witnessed this setup work and reach its final target. So Lucas took it. The momentum was not there. The context was not clean. Only 2 of his required confirmations were present. The third and fourth were not. Under normal conditions, he would have passed. He had passed on trades like this hundreds of times. Because the third confirmation was not optional. It was what separated the setups that worked from the ones that looked like they would work. He entered anyway. Not because he forgot the rule, because $1,200 made the missing confirmation look smaller than it was. He told himself the context compensated. The context did not compensate. The trade stopped out in 14 minutes, and it had not gone above the entry level for even a single second. It just dropped, from entry until stop. Lucas needed to reach $1,200, and in his first trade he had seen not a single second of profit before stopping out. Rent day was approaching. He sat with the loss for a moment. He had dropped from 400 to roughly 320. The math running in the background updated instantly. The distance between 320 and 1,200 had grown even larger. And after that loss, he felt something in the way he was reading the market change instantly. Not dramatically, just slightly. The way everything changes slightly when something does not go the way you needed it to. He was still looking at the chart, but something was different. Lucas no longer saw the chart. He saw only the chasm between what he had and what he desperately needed, caught in a near-hypnotic trance. He did not appear capable of making objective and rational interpretations, and this gap sat in front of every decision he made for the rest of the session. If this is landing somewhere real for you, a like and a subscribe is all it takes to keep this content coming. I can recover, he was thinking to himself. Just one stop. That's all. And the second trade came. Everything was worse. Not because it was a bigger loss, because he took a setup he should never have taken at all. This time there was not a single sign for him to take it, but Lucas had told himself he felt it. It will turn, he had said. But the price just kept falling. Price had been moving, and while watching that movement, the part inside him that had gone quiet but had not left had almost whispered to him, "This is it. This is the move." He had thought he saw a potential high-R setup, but in reality there was nothing to see. He had practically hallucinated, and the voice had whispered to him, "Get in before it goes." He got in. It went in the wrong direction. Another stop. 320 became 240. Everything was not over yet. Lucas was thinking, if I can pull myself together, I can fix everything. And he had no choice but to think that way. After that, Lucas spent 40 minutes watching without trading. He let his emotions and thoughts settle a little. He calmed down. Though staying still had been extremely difficult for him, this was the longest 40 minutes of his trading life. Not because nothing was happening on the chart, because something was. The market moved in the direction he had originally identified for the first trade, but this time, without him. Unhesitating. Clean. Exactly as the system said in the right conditions, it moved to its original target, full distance, a clean 10R trade, which, from where he was now, from $240, could have taken him to $1,040. Only $160 would have remained to his target. Without those two stops, this setup would have been enough, in a single trade. But he could only watch. He was not in the position. He sat with $240 watching the profit he should have made pass by in front of him. If he had waited, if he had let the third confirmation arrive, if he had traded the setup and not the need, the market did exactly what his analysis said it would, while Lucas was not in it. This is the true cruelty of trading with money you need. Not merely losing, but watching your perfectly accurate analysis unfold and hit its target, while you're trapped on the sidelines. Your need forced an early entry, triggering a stop, and then the market moved exactly as you predicted, but without you. The analysis was right. The system worked. The only thing that failed was the person operating it. And the person who failed was not the same person who had built the system. It was the person who had come that morning with $1,200 in the place where a framework should have been. If Lucas had followed only his system instead of loading himself with this kind of mission, if instead of seeing this need and urgency and making a plan for it, he had simply followed his system, he would actually have pulled out the rent money in a single trade. But things progressed in a completely unexpected way. Lucas took 2 more trades before the session ended. He should not have taken either of them. The first was a complete reversal play, something his system did not include, built entirely from the feeling that the market owed him something after what had just happened, and its result was no surprise. The market owed him nothing, it never does. The second was closer to a real setup, structurally almost correct even. But the context was wrong, and he knew deep down that the context was wrong, and he entered anyway, because $240 and 11 days and $800, and the thought that this might be the last real opportunity before the session ended, and tomorrow is another day, but tomorrow was not paying rent. The second trade stopped out faster than the first. The session ended with $112 in the account. He had turned 400 into 112 in a single session. The target had been 1,200. The result was 112. The market had, as it always does when you bring this into a session, taken almost everything from Lucas. Lucas should have been shocked and angry, but instead he was silent, numb. He was questioning himself. There had been almost not a single trade where he had managed need-driven trading correctly. And despite knowing this, how had he convinced himself otherwise and gone down this road? I experienced this too. We all have. I was pressed for money and had rent to pay. I knew very well what happened when I traded from a place of financial need, but in that moment I felt like I had no other choice. And I lost the money I had too. That is the reality. You may feel like you need to try, but most of the time this leads to one thing, and we all know very well what it leads to. Here is what actually happened. Lucas came to the screen that morning with a replaced framework, the framework he had spent 18 months building, the one that said, wait for all three confirmations, the one that said, context matters as much as structure, the one that said one trade at a time and the next trade does not know about the last one. That framework was present, but it was no longer in charge. Something else was in charge. The number. And the number changed how he read every setup that appeared. It made incomplete setups look more complete than they were. It made the missing confirmation seem optional. It made staying out feel like missing rather than patience. It made every loss feel like an emergency that required an immediate response rather than a data point that required a log entry. The market did not know any of this. The market was doing what the market does. Moving, creating conditions that either match your criteria or do not. Producing outcomes that are the product of probability rather than of any awareness of what you specifically need. The market does not know you exist. What existed that morning was a trader who was no longer executing a system. He was executing a need, and needs, brought to a probability game, are almost always condemned to lose. Because needs want certainty, not uncertainty, and probability cannot provide certainty. It can only provide edge over time. And edge over time requires staying inside the framework, and Lucas had left the framework the moment he sat down that morning. Before the first trade, before the first setup, the moment he looked at the screen and saw $1,200 instead of price. The cycle of losing had already begun long before he was aware. He simply did not want to see it. Because there had not been a single day where he had managed need-driven trading correctly and gotten the result he wanted. He should not have found it hard to predict the outcome, but feeling like he had no other choice, he had tried again, and had learned a heavy lesson. The market does not know when you need the money, but you know it very well. And exactly that is what makes the difference, because knowing changes you in ways you cannot see from inside the session. Even if you do not notice, it changes the filter through which you read every signal. It changes the threshold at which you decide a setup is complete enough to trade. It changes what you do after a loss and how long you wait before the next entry. It changes everything, and everything it changes moves in the same direction. Away from the system, away from the edge, toward the need. And the need, every single time, costs you more than you came in with. Not because the market punishes desperation, because desperation punishes itself. The market just records the outcome. Of course, the market has no knowledge of our bills and our needs, but it is enough that you know. Enough to destroy your entire framework and step outside your rules. Enough to rationalize it all. Lucas paid rent that month, not from trading. He borrowed from a friend. He paid it back 2 months later when the trading returned to what it had been before the bad month, which it did, because the system worked, which it had always worked, which it would have worked that session if the framework had stayed intact. The bad month was real. The cluster of losses that started it were within normal parameters. His system was not broken. The month was not a sign that his system did not work or that he had been trading for too long. What it proved was not that the system had failed. It proved what happens when you bring a need to a place that requires neutrality. He did not touch the account again with money he could not afford to lose. He kept that as a rule and never let it leave his mind. Not because someone told him to, because he had watched himself in real time choose need over system and seen exactly what that choice cost. He never wanted to borrow money from anyone for rent again. The memory of it was not a general memory of having had a bad session. It was a specific memory of watching what he needed to see before entering pass by in front of him without being in position because $1,200 had made the third confirmation seem optional. That specificity was the lesson. Not a lesson about risk management or position sizing or any of the technical things that trading education usually offers. A lesson about what happens to your perception when the stakes inside the session are connected to something outside it. And Lucas chose to learn that lesson. The question is not whether the need will come. It will. The question is what you do in the moment it arrives. Lucas learned this the hard way, but the lesson, once learned, gave him something he had not had before. A decision he had already made. When the need showed up again, months later, a different month, a different pressure, a different number outside the screen, he did not have to think about what to do. He had already decided. He closed the platform. Not because he had no desire to trade, because he had already lived the alternative in enough detail to know what it cost. He took a walk. He called a friend. He looked for a different solution to the different problem. And the account, which was not touched that day, was there the next morning exactly as he had left it. Ready, neutral, not carrying the weight of what he had needed from it the day before. There is a version of discipline that is built in the moment. The moment the need arrives, you decide not to act on it. This version fails almost every time, because the need is loud and the decision is new, and loud usually wins over new. The version that works is built before the moment. You decide in advance what you will do when the need arrives. Not if, when. And when it does, you do not make a new decision. You execute an old one. Lucas had made that decision. It cost him $400 in 11 days and $112 and a borrowed $800 to make it. But he made it. And it held. He never traded from a place of need again. The stakes and the session cannot share the same space, the rent and the account, the need and the system. They cannot occupy the same morning. Every time they do, one of them leaves with what the other brought. And it is never the system that wins when the need is in the room. The market does not know when you need the money, but the need knows. And the need changes everything it touches. Keep them separate, not as a trading rule, as a condition of the entire enterprise. Here is what practically changes when you keep them separate. The account stops being a solution to problems it was never designed to solve. Rent is not a trading problem. It is a life problem, and life problems require life solutions. A second job, a borrowed sum, a delayed payment, a conversation you have been avoiding. These solutions are not glamorous, but they do not cost you the framework you spent years building. The account, kept separate from need, does something remarkable over time. It becomes reliable, not because the market becomes easier, because you become more consistent. And consistency compounds in a way that desperation never can. The sessions where you did not trade because you needed to are the sessions that protect every session where you did trade because the conditions were right. Every time you close the platform because the need arrived and not the setup, you are adding to a record that eventually becomes evidence. Evidence that you can be trusted by the market, by yourself. Lucas understood this in retrospect. The $400 he lost that day, the $112 he was left with, the $800 he borrowed, these were not just losses. They were the price of a decision he was not yet able to make. He made it eventually. And the account, kept separate from what he needed from it, began to tell a different story. One that matched the system he had built rather than the desperation he had brought to it. The moment they meet, the session is already over. You just have not seen the outcome yet.